Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine a future where the very metals powering your electric vehicles, your renewable energy, they don't come from deep, dusty mines on land. The kind where ecosystems get ravaged and communities are often displaced. Instead, picture them coming from the quiet, dark abyss of our own oceans. It sounds like something straight out of a Jules Verne novel, doesn't it? Yet, for one company, this isn't science fiction. It's the astonishing, potentially game-changing reality they are fighting tooth and nail to make happen. But make no mistake, this isn't just a battle for resources. It's a multi-front war. From the crushing depths of the ocean floor to the marble halls of global power and even the unpredictable court of public opinion. Today, we're embarking on an in-depth exploration of the metals company. You probably know them as TMC. This Canadian firm is boldly positioning itself to tap into the deep sea's unimaginable mineral wealth. If successful, this move could fundamentally redefine how we source critical battery metals like nickel and cobalt. It could shift the paradigm entirely. Our mission is clear. We're here to navigate these murky, high-stakes waters with you. We'll unearth the most crucial nuggets of information, the surprising facts, the compelling arguments. We want to help you understand TMC's audacious vision, its unique, almost insurmountable challenges, and the truly incredible stakes involved for everyone. We'll focus today on the burning question. What's the true likelihood of TMC securing those absolutely crucial U.S. mining permits? And how might this monumental decision impact not just their corporate performance, but the very future of deep-sea mining itself?
What's truly fascinating here is that we're not just talking about a company innovating within an existing industry. We're witnessing an attempt to forge an entirely new industry from scratch. It's kind of like the early days of space exploration, but for minerals. This colossal endeavor immediately raises a profound question. Can a single entity truly navigate the unprecedented regulatory, environmental, and technical hurdles? Or are they perhaps sailing directly into a perfect storm that could sink them before they even truly begin to commercialize?
Okay, let's pull back the curtain on the navigator steering this audacious deep-sea dream. Every ambitious quest, especially one rewriting the rulebook, needs a pioneering crew with vision and absolute grit. And TMC has certainly assembled a fascinating, almost paradoxical blend of entrepreneurial daring, deep mining experience, and strategic brilliance. At the helm is Gerard Barron. He's the 58-year-old CEO and co-founder. Gerard is a serial entrepreneur, famously building AdStream, the global advertising technology firm, scaled it to over $100 million in revenue. He then brought that same scaling mindset to TMC, formerly Deep Green Metals, right from its inception in 2011. He even steered them through that splashy 2021 SPAC merger to get listed on NASDAQ. And in a truly visionary move, way back in 2012, he forged a significant deal with Glencore for 50% of future nickel and copper production. This isn't just a CEO. This is a man consumed by a vision of low-impact mining. He believes it's not just an option, but maybe the only viable path forward for our planet.
Now, while Barron's entrepreneurial track record with AdStream is undeniable, it's also critical for you to remember his prior involvement with Nodules Minerals. That was another deep-sea mining company that, quite famously, faced a dramatic financial collapse. This isn't a small detail. It's a significant scar on his resume, frankly. However, if we connect this to the bigger picture, his deep and unwavering commitment to TMC's mission today suggests something profound, a belief so strong it borders on the messianic maybe. He's putting his entire reputation on the line for this, demonstrating a faith in this audacious goal that few possess. He's effectively trying to rewrite his own history here.
That Nautilus connection definitely raises eyebrows, no question. But let's look at who else is in the cockpit. We have Anthony O'Sullivan, also 58, the Chief Development Officer. He's a true veteran, a real pro with over 30 years in mining, including a significant stint as COO of, yes, Nodules Minerals from 2005 to 2012. He led exploration efforts there, secured permits in Papua New Guinea. Before that, he was a key part of BHP Billiton's global exploration leadership team. His experience here is, frankly, invaluable. He understands the dirt, or maybe I should say, the deep-sea mud.
His technical prowess is absolutely critical. You can't overstate it. Since joining TMC in 2021, O'Sullivan has spearheaded the technical development of their key NRID project. That included those successful nodule collection trials back in 2022. These weren't just theoretical exercises. They were the first tangible proof of concept for large-scale collection. This kind of deep, hands-on operational expertise is invaluable for taking a theoretical concept, the grand vision, and scaling it up into a tangible functioning operation on the ocean floor. Without his practical engineering mind, the dream would likely remain just that, a dream.
Okay, rounding out this formidable trio, we have Erica Elves, 47, the Chief Strategy Officer. She joined TMC in 2018 after 15 years at McKinsey & Company. She honed her strategic consulting chops there on incredibly complex, high-stakes projects for Fortune 500 companies. And this isn't even her first rodeo in groundbreaking resource ventures. She previously co-founded Offworld Inc., which focused on robotic mining, and Shackleton Energy, which ambitiously targeted lunar resources. She clearly has a mind that thrives at the extreme edges of innovation.
Her role is utterly pivotal, especially in securing critical partnerships. We've recently seen this with the very significant $85.2 million investment from Korea Zinc. That's a real testament to her strategic capabilities and her ability to articulate TMC's vision to major industry players. She's also instrumental in shaping TMC's long-term vision for a circular metal economy, making sure the company isn't just about extraction, but also about responsible, sustainable utilization and reuse. She is truly the strategic brain guiding the company's long-term trajectory, thinking decades ahead, not just years.
Finally, let's talk about the numbers guy, Craig Shesky. He's 41, the chief financial officer. He's been with TMC since 2021 and brings 15 years of financial markets experience, including senior analyst roles at King Street Capital Management and Morgan Stanley. This kind of background is critical for a company navigating such a unique and often treacherous financial landscape.
Shesky is managing TMC's finances during what is undeniably a critical cash-constrained phase. It's tight. He's been instrumental in investor relations, navigating the company's often volatile stock price, which, impressively, hit a 52-week high just this month, showcasing his ability to manage investor sentiment, even without revenue. His talent for navigating these financial currents, attracting and retaining investor confidence, and managing a lean budget, well, it's absolutely essential for the company's sheer survival and its ability to fund its ambitious plans. It's a job for someone with nerves of steel.
So if this team is the current engine who ignited this whole deep-sea adventure in the first place?
Well, TMC was actually founded back in 2011 as Deep Green Metals by David Hayden. He was a geologist and former CEO of, yes, you guessed it, Nautilus Minerals again. While Hayden isn't actively involved anymore in the company's day-to-day, his son, Robert Hayden, now serves as head of new territories for TMC. So there's a generational link. But Gerard Barron remains deeply engaged as both CEO and chairman. He holds a significant 6.1% stake in the company. His continued leadership, backed by his varied entrepreneurial background, including those successful ad tech ventures, really positions him as the driving force. He's not just a founder, he's the persistent visionary who simply refuses to let this dream die, despite the immense challenges.
Okay, this company is currently pre-revenue. They're not selling a single thing yet. So this begs the question, how do they incentivize these top-tier leaders to keep pushing for such a long-term, high-risk goal when there's no immediate payoff? What's the secret sauce in their compensation structure? All right, good question. TMC's executive compensation is heavily tied to long-term value creation. That's pretty common, but particularly vital for pre-revenue, high-growth companies like this. For 2024, for example, Gerard Barron received a total compensation package of nearly $3.2 million. But this wasn't just a simple salary. It included a base salary, a performance bonus, and a very substantial portion in stock awards. His employment agreement sets a $750,000 base salary and a 75% target bonus. But a large chunk comes as restricted stock units, or RSUs. These are essentially future stock grants, and they vest only at specific ambitious stock price targets like $7.50, $10, and $12.50 by 2029. This structure means their personal compensation is intrinsically linked to the company's ultimate success and the increase in its share value. They literally only get rich if you, the shareholder, get rich too.
And in a powerful move that truly aligns everyone's interests, executives and directors collectively own a whopping 28.5% of the company's shares. That isn't just a vote of confidence, it's a massive commitment from those who know the company best. Real skin in the game, it ensures their interests are powerfully aligned with yours, the individual shareholders. Major external stakeholders also include ERS Capital and All Seas Group, which further solidifies their support network and lends additional credibility.
And interestingly, Barron's total compensation is actually below the U.S. market average for similar-sized firms, which reflects TMC's current development stage. They're not profitable yet. Compared to established profitable peers like MP Materials, TMC's incentives are overwhelmingly equity-based. This structure doesn't just incentivize, it truly demands that long-term growth we're all watching for, because their payout is tied directly to the company's future value, not just short-term operational metrics that can maybe be gamed. It's a high-stakes, all-or-nothing bet for their leadership, just as it is for their investors.
Here's where it truly gets captivating. TMC's mission statement is to build a carefully managed metal commons that will be used, recovered, and reused again and again. Their vision is nothing short of supplying critical metals for the energy transition with minimal environmental and social impact. They're aiming for a true circular metal economy. This is a far cry from the traditional dig it up, leave a mess, and move on approach we've seen for centuries. What does that circular metal economy really entail for them?
This audacious goal truly positions TMC as a pioneer in what could be the next frontier of sustainable mining. It challenges every assumption we have about resource extraction. A circular metal economy for TMC means minimizing waste at every single stage, from collection to processing, and ultimately ensuring that the metals, once extracted, can be infinitely recycled and reused within the global economy, which, in theory, reduces the need for continuous new extraction. Their culture embodies this. It emphasizes innovation and sustainability. They've brought together a dedicated team of scientists, engineers, and environmentalists who seem deeply committed to addressing the climate crisis. They maintain strong engagement among their 47 employees across multiple countries through regular communication and flexible work, which is crucial for a geographically dispersed, highly specialized team working on the absolute bleeding edge.
But like any journey into uncharted waters, there are significant risks tied directly to this leadership team. This isn't just about the metals, it's about the people steering the ship. That Nautilus shadow looms large. How specifically are they different this time? Are Barron and O'Sullivan actively applying lessons learned from that $500 million loss? Or is there a genuine risk of history repeating itself?
That's a crucial distinction, and it's the elephant in the room for many investors, absolutely. Nautilus famously tried to build an entire subsea mining system before having clear environmental regulations or operational permits in place. They sank enormous capital into unproven tech without a clear regulatory runway. That was the killer. TMC has, wisely, inverted that approach. They're prioritizing rigorous environmental impact assessments, securing permits first, and then leveraging established partners like Allseas for the heavy operational lifting rather than building it all themselves from scratch. It's a permit-first, partner-heavy strategy, a direct and conscious response to Nautilus's fatal flaw of overspending on unproven technology without a clear path to production.
Okay, so a different strategy this time, but the risks aren't gone.
No, not at all. Risks persist. Barron's central role means his departure, unlikely as it seems, could significantly disrupt the company's strategy. He is the face. Furthermore, this team must navigate fierce opposition from over 400 scientists and influential NGOs who warn of irreversible biodiversity loss from deep-sea mining. It's a very public and heated debate with intense scrutiny on their leadership. Despite their new strategy, the fact that both Barron and O'Sullivan were involved with Nautilus could still undermine investor confidence. It creates a persistent trust deficit they must actively overcome with transparent operations and undeniable success. Finally, any delays or outright denials in securing U.S. or international permits could completely stall their progress, regardless of strategy. This requires incredibly adept leadership to navigate the labyrinthine world of global regulations and geopolitical pressures, constantly adapting to shifting sands.
So how does this leadership stack up against the old guard of traditional land-based mining companies? Are they bringing something entirely new to the table, or are they just a smaller version of what's already out there, just underwater?
TMC's leadership is uniquely positioned for deep-sea mining, which is a very different beast.
Yeah.
Barron's entrepreneurial flair is a stark contrast to the typical, often conservative operational focus of traditional mining CEOs, the ones used to establish terrestrial practices and predictable regulations. O'Sullivan's technical expertise, honed over decades, certainly rivals any industry veteran. The key difference, though, is that traditional miners have predictable track records, established revenue streams, and existing operational expertise. TMC's team is betting big on an unproven industry. They're essentially creating the playbook as they go. This makes their vision inherently riskier, but so potentially transformative if they succeed. They are truly forging a new path rather than merely optimizing an old one. It's the difference between driving a well-worn highway and charting a course through unexplored territory.
Okay, let's strip it back. At its core, what's the fundamental economic engine TMC is building? What exactly is TMC's business model? It sounds conceptually simple, mining these polymetallic nodules from the seafloor to get nickel, copper, cobalt, manganese, but the devil must be in the details.
For you, the individual investor, it's almost like imagining a gigantic, high-tech vacuum cleaner sweeping up metal-rich rocks from the ocean floor, all to power our EVs. Sounds straightforward, right? But the reality involves incredibly intricate deep-sea robotics, operating under crushing pressures and in complete darkness thousands of meters below the surface. We're talking about highly specialized collection vehicles and riser systems designed to withstand environments more alien than the moon.
This also demands continuous real-time environmental monitoring to assess impacts and mitigate risks, often with unproven scientific methods. And layered on top of all that, there's a labyrinth of international regulations that are still being written, often with conflicting interests from nations and environmental groups. It's akin to the early days of space mining, a truly futuristic endeavor demanding cutting-edge technology and unparalleled global cooperation to even begin to make it feasible. It's less a vacuum cleaner and more like a space shuttle for the deep ocean.
Right. And TMC is currently pre-revenue, not selling anything yet. So what are they hoping to sell once they flip the switch? What do their future products actually look like, and how do they plan to get them to market?
Their key future offerings are not just raw metals, but refined products specifically designed for the next generation of technology. We're talking about high-purity, battery-grade chemicals specifically engineered for electric vehicle batteries. Copper cathode for wiring and transmission grids, the very backbone of electrified infrastructure. And manganese feedstock, which is essential for specialized steel alloys and other industrial applications. They haven't achieved product-market fit yet in the commercial sense because, well, they don't have a product to sell commercially. Their entire business model hinges on securing those crucial regulatory approvals.
And the timeline for that.
Their roadmap is ambitious. They involve scaling from those successful 2022 nodule collection trials to full commercial production. And they are targeting an incredibly aggressive Q1 2026 for that. This isn't just about pulling up rocks. It's about refining processing technology to achieve what they claim is near zero waste.
Yeah.
In practice, this means developing a hydrometallurgical process, which uses water-based chemical solutions to extract metals rather than traditional energy-intensive smelting. This approach aims to leave behind dramatically less solid waste and fewer emissions. A monumental achievement in resource extraction if it proves out at scale. They envision a seamless flow from seabed to battery.
In a world absolutely hungry for metals, what sets TMC apart from everyone else? What makes their approach unique in an industry that's been around for millennia? Is this just another mining company or something truly different?
Their model is truly unique because of its exclusive focus on deep-sea polymetallic nodules. They aren't just a different source. They claim these nodules have a whopping 54% to 70% lower global warming potential compared to traditional land-based mining methods. Think about that for a second.
Yeah.
Massively reduced deforestation, no toxic tailing ponds, and far fewer carbon emissions tied to the extraction process itself. This is a game changer if proven at commercial scale. It offers a compelling environmental narrative that traditional miners simply cannot match.
And beyond the environmental claim.
Beyond that, their proprietary hydrometallurgical process, as we just discussed, aims to minimize waste. This directly aligns with their passionate commitment to sustainability, which is a core tenet of their corporate identity, and a powerful selling point to ESG-conscious buyers. Economically, the sheer vastness of the resource in the Clarion-Clipperton Zone, the CCZ estimated at 1.6 billion wet tons of nodules, could drive immense profitability if they manage to scale operations. This intersection of claimed minimal environmental impact, vast economic potential, and advanced technological innovation truly sets TMC in a league of its own. It's a high-stakes, potentially high-reward gamble on a new way of sourcing materials.
This isn't a startup that just popped up overnight. They've been around since 2011, laying the groundwork. What milestones have they actually hit to show tangible progress?
They've certainly been busy. They've secured exclusive exploratory contracts through subsidiaries like Marion and Nauru and Tomalo and Tonga, later acquiring Marawa and Kiribati, essentially locking down prime real estate on the ocean floor. The 2012 Glencore partnership was a massive vote of confidence from an established industry giant. It signaled early validation of their resource and a pathway to market. They went public in 2021 via that $2.9 billion SPAC deal, a bold move that brought significant capital and public exposure, albeit with scrutiny. And critically, they've conducted 22 offshore campaigns, including those significant 2022 nodule collection tests, which, against the odds, proved the technical feasibility of extraction, at least on a trial basis.
But still no revenue.
Correct. Despite these impressive milestones, it's crucial to remember TMC currently has no revenue or commercial production. This reflects its very early stage status. However, their proactive pursuit of UF permits in response to regulatory delays shows remarkable resilience and adaptability. They're refusing to be solved by bureaucratic hurdles and constantly looking for alternative paths forward.
Fascinating. So where exactly is this all happening, and how do they actually get things done logistically spread across the globe? It's not like they can just set up a typical mine site.
Well, their headquarters are in Vancouver, Canada, but their primary operations are centered in the Clarion-Clipperton Zone, the CCZ, That's a huge area, about 1,300 nautical miles off Southern California. Think of it as a vast underwater plain, teeming with these valuable nodules. Interestingly, their employees work remotely across multiple countries: Tonga, Nauru, the US, Canada, Australia, the UK, the UAE. A truly global, distributed team. TMC holds exploration rights through their subsidiaries rather than owning physical assets directly. A strategic choice for flexibility and minimizing upfront capital expenditure. Crucially, they partner with Allseas for the complex mining technology, leveraging their specialized vessels like the Hidden Gem. And they partner with Glencore for the actual metal offtake, effectively outsourcing key operational components to industry leaders. It's an asset-light, partnership-heavy approach that pushes the boundaries of how a mining company typically operates.
So, given that asset-light approach, are they trying to do everything themselves, building out a massive, fully integrated operation, or relying on others? Where do they draw the line?
TMC aims for a high degree of vertical integration. They want to control nodule collection, processing, and refining, seeking to manage the entire value chain from ocean floor to final product. Their proprietary processing technology is designed to minimize reliance on external processors, which could significantly reduce costs and improve quality control in the long run, giving them more control over their output. However, they do depend heavily on Allseas for those specialized mining vessels and Glencore for distribution, meaning they don't have full end-to-end control over every single step right now. It's a strategic balance, insourcing the core intellectual property and capabilities while partnering for the capital-intensive, specialized physical operations. It's about being lean where they can and leveraging expertise where they can.
Once they start pulling up these nodules, assuming the processing works, how will they actually sell the metals? Who are their customers, and how does the product get to market? This isn't exactly a corner store selling pebbles.
Right. TMC's distribution will primarily involve robust offtake agreements, like their existing deal with Glencore, selling processed metals directly to manufacturers or into established commodity markets. This business-to-business model is designed for scalability, allowing them to move massive quantities of metal efficiently, almost like a direct pipeline from the deep sea to industrial users. The recent Korea Zinc investment also hints at the potential for more direct, strategic partnerships with major refiners down the line, which could secure long-term, high-value contracts and maybe bypass some of the commodity market volatility. Imagine them as a new, high-tech wholesaler for the green energy revolution.
Okay, this is the one every investor wants to know. When can we expect to see actual money coming in, and how stable will that revenue be? Can we predict their future earnings with any certainty at all?
With no current revenue, predictability is, frankly, extremely low. They are in pure development mode, speculative. Future revenue from long-term contracts could certainly provide stability once production begins, but the inherent volatility of global commodity prices always poses a significant risk. Metal prices, as you know, fluctuate wildly. Supply, demand, geopolitical events, they all directly impact potential earnings. The Glencore agreement does, however, secure a buyer for 50% of their NRI output. That offers a glimmer of predictability and a guaranteed sales channel once commercial production finally begins. But that once is the multi-billion-dollar and currently entirely speculative question.
But it's definitely not all smooth sailing, is it? What are the major storms brewing on the horizon that could threaten TMC's ambitious plans? We're talking about an entirely new industry here.
Oh, the storms are legion. Regulatory roadblocks are perhaps the most significant. Absolutely number one. Delays or outright denials from key bodies like the U.S. National Oceanic and Atmospheric Administration, NOAA, or the International Seabed Authority, the ISA, they can bring everything to a grinding halt, potentially for years. Then there's the environmental uproar, the fierce opposition from powerful NGOs like Greenpeace and literally hundreds of scientists. They cite the risk of irreparable biodiversity loss from deep-sea mining. That could lead to widespread moratoriums, similar to what happened with Nodules Minerals. These groups are highly vocal and well-funded, and they are not backing down.
And technically, operationally.
Technically, the commercial-scale mining they envision is still unproven technology. Nobody has done it successfully at scale yet. There's a very real risk of operational failures, unforeseen inefficiencies, or unexpected costs once they attempt to scale up from trials to full-blown production. Remember, the deep ocean is not a forgiving environment. It's harsh. Furthermore, a geopolitical minefield awaits. U.S. permits might clash with the AZA's international authority. That could spark significant international backlash in diplomatic disputes, especially from nations with their own deep-sea ambitions. And finally, market swings are always a threat. If global metal prices decline significantly, it could erode their profitability. especially given the massive upfront costs required to establish this new industry. It's like trying to build a castle on a foundation of quicksand.
Given all these powerful threats, how robust is their business model? Can they weather the storm, or are they built on shifting sands perpetually on the brink?
TMC's model shows a surprising degree of resilience through its dual regulatory strategy, pursuing both U.S. and ISA permits, and its strong partnerships. Those partners provide both capital and operational expertise, which helps. They've efforted in the past, for instance, delaying some international applications to better align with regulatory progress, and securing crucial funding like the Korea Zinc deal. These are strategic maneuvers to stay afloat.
But the finances.
Exactly. However, their very low cash reserves, currently only $2.35 million, combined with a high burn rate, make them particularly vulnerable to unforeseen delays or additional costs. For you, the individual investor, that $2.35 million in cash should immediately trigger a critical question. How long can they truly operate at their current burn rate without another major capital infusion? It's a very tightrope walk financially. One misstep, one regulatory delay, one unforeseen technical hiccup could have immediate dire consequences. They're quite literally operating on fumes.
So what kind of special power or competitive advantage does TMC possess in this nascent industry? Do they have something truly unique that sets them apart from future contenders?
Well, TMC effectively holds a near-monopolistic position in certain incredibly valuable areas of the Clarion-Clipperton Zone. They have exclusive exploration rights through their subsidiaries Nori, Tomalel, and Maroa. The ISE's regulatory framework deliberately limits new entrants, as contract areas are allocated very sparingly. This means for the foreseeable future, TMC controls access to some of the most promising deep-sea mineral deposits. It's like owning the only gold mine in a newly discovered frontier, for now.
Could they become incredibly efficient as they grow? Is there a path to true economies of scale like we see in established industries that would make them unstoppable?
If TMC truly scales production, larger operations could significantly reduce their per-unit costs. They could leverage that immense 1.6 billion ton resource. This is the theoretical promise of deep-sea mining. Once the infrastructure is in place, the cost of extracting additional nodules is relatively low, potentially. Right now, this scale is purely theoretical. Even their direct competitors like Deem are still pre-production. The efficiencies of continuous large-scale seafloor exploration are a major part of the long-term investment thesis, but they are yet to be proven in practice. We're talking about potential, not current reality.
How do they stack up against the old guard of land-based mining? Are they just another miner, or are they presenting a fundamentally different proposition?
TMC cleverly positions itself as a fundamentally more sustainable alternative. That's their key angle. They claim an astonishing 80% lower environmental impact for nickel production compared to traditional land-based methods, which involve devastating deforestation, massive tailing ponds, and significant carbon emissions. This is a critical edge, a narrative no traditional miner can honestly match. It gives TMC a unique appeal to environmentally conscious investors, manufacturers, and even governments seeking to source materials responsibly. They're not just offering a new source, they're claiming to offer a cleaner source.
Do they have access to something nobody else does? Is there a resource so vast and unique that it gives them an insurmountable lead, a truly cornered resource?
Absolutely. TMC's exclusive Clarion-Clipperton Zone contract areas are estimated to contain a staggering 15.5 million tons of nickel, 12.8 million tons of copper, 2.0 million tons of cobalt, and 345 million tons of manganese. To put that in perspective, that's enough nickel to power literally millions upon millions of electric vehicles. These are truly immense resources that competitors simply cannot access without similar exclusive contracts. Their talent pool, including O'Sullivan's deep technical expertise and Erica Ills' strategic acumen, is also a significant, difficult-to-replicate advantage. They have the map to the treasure and the specialized crew to find it.
Are they doing something truly unique in how they get these metals? Is their process patented or so innovative that it creates an impenetrable barrier to entry?
Their near-zero waste processing technology is a proprietary advantage. They say it's refined over a decade through extensive R&D. This isn't something you can just copy easily. It makes replication incredibly difficult for potential rivals. Their nodule collection and processing systems are also patented, and the company claims they offer a tenfold improvement in environmental impact over land-based methods. If these claims hold up under commercial scrutiny, it gives them a very powerful, protected method of operation that could revolutionize the industry. They're not just finding metals, they're finding them with a radically different, supposedly cleaner methodology.
Are they truly leading the pack in this new industry as being first a crucial advantage here?
TMC is definitely a first mover in modern deep-sea mining. Their trials date all the way back to 2011. If they manage to start production by 2026, they could capture significant market share and establish crucial industry standards. Before other potential competitors like DEEM or China, Minmetals can truly ramp up their own efforts. Being the first to market can often solidify a dominant position, build crucial supply chain relationships, and create a powerful brand narrative around pioneering a new frontier.
How quickly can they move? Can they pivot and adapt, or are they slow and lumbering like a giant underwater dredge?
TMC's rapid U.S. permit application following that key executive order demonstrates their agility, their responsiveness to changing political winds. This wasn't a slow bureaucratic process, it was a quick, decisive move. However, scaling to full commercial production will require overcoming immense technical and regulatory hurdles. That's a marathon, not a sprint. While they can react quickly to opportunities, the core task of establishing a brand new industry from scratch will inherently be a long, drawn-out process, measured in years, not months.
Can these advantages truly last? Are they sustainable in the long run, or could a competitor just come along and build a better mousetrap?
Their unique set of advantages, those exclusive contracts, proprietary technology, and that powerful sustainability narrative could indeed be sustainable if they successfully manage the regulatory and environmental challenges ahead. That's the big if. Strong partnerships with Allseas and Korea Zinc certainly bolster their execution capabilities and provide a robust support system. Makes them harder to dislodge.
But it's not guaranteed.
No advantage is guaranteed in a rapidly evolving world like this. New IS contract allocations to other players, significant technological advancements in traditional land-based mining that somehow reduce its footprint, or even stricter global environmental regulations could certainly erode their advantages over time. The landscape is constantly shifting, and TMC will need to be perpetually innovative to maintain its lead. It's a high-stakes race where the rules are still being written.
Okay, so they have these unique advantages, and they're sitting on a truly colossal resource. But how do they actually plan to grow into a revenue-generating powerhouse? What's their playbook for scaling up?
TMC's entire growth strategy hinges on one pivotal moment: transitioning to commercial production by Q1 2026. This is the absolute make-or-break moment for the company, the leap from ambition to tangible results. Their strategy involves relentlessly scaling NORAD operations to hopefully flood the market with desperately needed battery metals, exploring new contract areas if those crucial U.S. licenses come through, continuously enhancing their processing technology for peak efficiency and even lower waste, and maybe even diversifying into a services business for seafloor mining in the future, effectively helping others extract minerals with their expertise. They could aim to be the Intel Inside of deep-sea mining.
What are the big opportunities that could fuel this growth beyond their initial plans? Where could they expand next?
Those potential U.S. permits could unlock vast new Clarion-Clipperton Zone areas for them, dramatically expanding their resource base, pushing them into new frontiers. They could also refine high-purity metals for lucrative niche applications, commanding premium prices beyond bulk commodities, maybe for specialized aerospace or medical uses. And keep an eye out for potential mergers and acquisitions, perhaps acquiring other ISA contract holders like they did with TML, consolidating their control over these unique ocean resources. While regulatory delays and funding needs are always risks, past successes like their SPAC merger suggest they have the capability to execute on these ambitious plans. They've shown a knack for complex financial maneuvers and strategic acquisitions before.
How big is the prize they're chasing? What's the total addressable market for the metals they plan to extract? Are we talking niche or massive?
We are talking absolutely staggering numbers. Massive. The global battery metals market is projected to skyrocket to $20 billion by 2030, driven by the insatiable demand for EVs and renewable energy storage. TMC's Clarion-Clipperton Zone resource alone could supply a staggering 56 million tons of nickel, 7 million tons of cobalt, and 85 million tons of copper, theoretically enough for the entire U.S. EV fleet for generations. Capturing even a fraction, say 10%, of the global nickel market could yield billions in annual revenue. It's an absolutely enormous market opportunity, one of the largest commodity plays available today, truly essential for the green energy transition. The prize is immense.
And where would these metals actually go? Just EVs or broader applications? And how secure is their supply chain once they're running?
TMC's metals aren't just for EVs. They serve energy storage solutions for grids, steel production for infrastructure, even defense applications. That ensures broad scalability across multiple critical industries. This diversification reduces their reliance on any single sector, making them more resilient to market shifts. Their deep-sea source offers crucial diversification for the global metal supply. Reducing reliance on terrestrial mines in politically sensitive regions like Indonesia or the Congo offers geopolitical stability to a volatile supply chain. Their partnerships with Allseas for extraction and Glencore for distribution also help mitigate supply chain risks by working with established, reliable players.
Who will buy these metals in the long run and will demand last for decades? Or is this a fleeting trend?
Their future customers will span the entire automotive sector, like EV manufacturers, as well as the steel and energy industries, further reducing dependency on any single sector. The accelerating trends of electric vehicles and renewable energy absolutely ensure long-term, sustained demand for these critical minerals. There's probably a 90% probability that TMC's metals will remain relevant for decades, given the global shift towards electrification. Their model could potentially weather market downturns if their production costs are highly competitive. Though those regulatory and environmental risks do, of course, persist. This isn't a fad, it's a fundamental shift in how the world powers itself.
So what are the absolute critical factors that will make or break their growth? And what could send it all sideways despite their plans and resources? The real make or break elements.
It boils down to a few core drivers. First and foremost, regulatory approvals, both U.S. and international, from the ISA. Paramount. Without them, it's a non-starter. Second, successful commercial production at scale is non-negotiable. They have to prove they can do it efficiently and profitably. Third, strategic investments like that $85.2 million from Korea Zinc are essential for funding, keeping the lights on, the R&D flowing. And finally, of course, rising metal prices will dramatically improve their profitability, turning theoretical value into real earnings.
And the risks.
On the flip side, the main risks are regulatory uncertainty that could drag on for years, relentless environmental opposition that could trigger global moratoriums, those formidable technical scaling challenges inherent in an unproven industry, and potential market saturation or significant price declines in metals that would erode their margins. It's a very fragile balance.
Let's get down to brass tacks. What do their financial statements tell us right now about the health of this company? Robust or walking a tightrope?
TMC's financials are exactly what you'd expect from an exploration stage company.
Yeah.
No revenue and significant losses. As of Q1 2025, they reported zero revenue and a net loss of $20.6 million. For the full year 2024, their net loss was a substantial $81.943 million. Operating expenses are significant, a necessary cost for R&D and permitting.
Okay, but the cash position.
Now, this is where it gets critical for you, the individual investor. Their cash and equivalents plummeted to a concerning $2.35 million by March 2025. This isn't much more than pocket change for a company with such colossal ambitions. It's really low. Total liabilities, on the other hand, rose sharply to $81.25 million in Q1 2025, reflecting existing debt and payables. Your current ratio, a measure of short-term liquidity, is extremely low at 0.13, which indicates a very challenging liquidity position. To put it bluntly, they are operating on fumes, with liabilities far outweighing their immediate cash.
Wow. And the trends?
The trends are stark and concerning. Losses have increased year over year. Cash burn is accelerating dramatically. Reserves plummeted from $84.87 million in 2021 to that alarming $2.35 million figure in Q1 2025. This screams urgent funding needs, possibly in the next few months, if not sooner. Liabilities are also on the rise. Compared to an operational peer like MP Materials, which pulls in over $1 billion in revenue and is profitable, TMC's financials are far weaker. Reflects its pre-production status. While other exploration stage companies like Critical Metals Corp also report losses, TMC's critically low cash reserves are a major immediate concern. The bottom line is clear. TMC's financial health absolutely hinges on securing substantial funding immediately. And most importantly, receiving those regulatory approvals to finally transition into production. Without them, it's a very difficult, if not impossible, path forward. This isn't just a hurdle. It's a gaping chasm they need to bridge, urgently.
This is always the trickiest part for a company like TMC. How do you even begin to value something that isn't making money yet, whose future is so uncertain and reliant on external factors like regulatory decisions? Feels like reading tea leaves sometimes.
You're absolutely right. The classic margin of safety principle, buying stocks below their intrinsic value. It's incredibly difficult to apply here. Estimating TMC's true intrinsic value requires making highly speculative assumptions about future cash flows, which are still a distant dream, an ethereal concept at best. Despite the difficulty, valuation is crucial. It helps you, the individual investor, decide if TMC's stock, currently at $1.60 as of June 2020-2025, is overvalued, undervalued, or fairly priced, especially in what is an exceptionally high-risk sector. It's not about finding a perfect number, but understanding the spectrum of possibilities and where the risk truly lies.
So what approaches can we take to try and put a number on this, knowing how speculative it is? How do we even begin to gauge its potential worth?
Well, one approach is an intrinsic valuation using a discounted cash flow, or DCF model. This would project potential future revenues from mining. But given the immense risks, you'd need to use a very high discount rate, maybe 15% or even higher, to account for the enormous uncertainty. Even then, making assumptions about when production starts, what metal prices will be, how high costs will run, it makes this highly speculative. Such a model, maybe assuming a hopeful $500 million in annual revenue by 2028, might yield an intrinsic value of perhaps $2.50 per share, indicating some modest upside if everything goes perfectly right.
And comparing to others.
Relative valuation, comparing TMC to peers like MP Materials, which has a price-to-earnings ratio of 50, is nearly impossible because TMC has no earnings to compare. There's no E in their PE. Market capitalization comparisons with TMC at $1.09 billion versus MP Materials at $2.5 billion suggest TMC is valued lower, but that just reflects its much earlier, more speculative stage. Finally, you could use a resource-based valuation, assessing TMC's massive 1.6 billion ton resource. At current metal prices, a 2024 study suggested a potential raw in-ground value of an astonishing $20 trillion, enough to make your jaw drop.
20 trillion. That's unbelievable.
Right, but here's the massive kicker. Extraction costs and critically regulatory hurdles and the sheer time it would take, they reduce that figure by orders of magnitude. A more plausible realization with current technology and costs is maybe 0.1% of that, perhaps $20 billion. This method, while exciting, highlights potential rather than current reality. It's the difference between seeing a mountain of gold and actually digging it out safely and profitably.
Okay. Here's where the rubber meets the road for you, the investor. What are the compelling arguments for and against TMC right now? Let's start with the bear case. Why someone might be extremely cautious or even avoid this investment entirely.
The argument against TMC, the bear case, is powerfully rooted in the operational, regulatory, and financial challenges that could absolutely derail their grand ambitions. Regulatory uncertainty is paramount. TMC's reliance on securing U.S. mining permits and IC approval is fraught with danger. The ISA itself faces immense pressure from 27 member states pushing for a moratorium on deep-sea mining due to environmental concerns, and unilateral U.S. permits. They might violate international law, potentially leading to sanctions or legal challenges, complicating their ability to operate internationally. Any delays could push production far beyond 2026, bleeding finances dry and making profitability a distant mirage.
Then the environmental backlash.
Huge hurdle, perhaps the most visible one. Over 800 scientists and powerful NGOs like Greenpeace are calling for an outright ban, citing the risk of irreparable biodiversity loss in an ecosystem we barely understand. Public and regulatory scrutiny, as seen with Nautilus Minerals, could completely halt operations or make them politically unpalatable, regardless of their technology.
And the money.
The financial fragility we just discussed. With only $2.35 million in cash and $81.25 million in liabilities as of Q1 2025. TMC is teetering on a liquidity crisis. That high cash burn rate, with no revenue, escalates the risk of massive shareholder dilution from desperate fundraising or even outright bankruptcy if funding dries up unexpectedly. Technical risks are also substantial. Scaling from trials to full commercial production is an unproven leap. It's never been done successfully by anyone. Equipment failures or unforeseen inefficiencies could inflate costs beyond imagination, wiping out any projected margins. Finally, commodity price volatility is a constant threat. Nickel prices, for instance, were down 20% in 2024. If they keep falling, TMC's high-cost, pioneering operations might become entirely unprofitable before they even get off the ground. On social platforms, you hear loud warnings. TMC's environmental claims are shaky. Their cash burn is unsustainable. This is a speculative gamble. Others point to Barron's Nodules failure as a glaring red flag, arguing history is poised to repeat itself. It's a very precarious situation.
Wow, okay, that's a heavy bear case. But for those with a high tolerance for risk and a keen eye on the future, the bull case sees TMC as a first mover in a truly transformative industry, perfectly positioned to capitalize on the global hunger for battery metals. What's the optimistic, almost audacious view?
The optimism stems from several powerful factors, making it a compelling, albeit speculative, opportunity. First, the strategic timing is impeccable. The EV boom and critical mineral shortages mean TMC is perfectly placed to meet soaring demand for nickel, cobalt, copper, essential for the green energy revolution. Crucially, that U.S. executive order on April 24, 2025 signals clear government support, potentially fast-tracking those permits by making deep-sea minerals a national strategic priority. It's a literal green light from the White House.
And the resource itself.
Second,
The resource scale is undeniable, a true geological marvel. TMC's 1.6 billion-ton CCZ resource could supply metals for millions of EVs, offering a multi-decade revenue stream. It's an economic behemoth waiting to be unleashed, promising generational wealth if tapped successfully, a veritable gold mine at the bottom of the ocean. Third, the sustainability edge is a powerful narrative, not just marketing fluff. TMC's claim of 54% to 70% lower environmental impact versus land-based mining. That's a massive appeal, especially to ESG investors and manufacturers under increasing pressure to source materials responsibly. Their near-zero waste processing could even secure premium contracts.
And the partnerships add weight.
Fourth, powerful partnerships validate their vision. Significant investments like Korea Zinc's $85.2 million and the long-standing Glencore offtake agreement, they strongly validate TMC's potential and provide essential financial and operational backing from major industry players. These aren't small votes of confidence. They're billion-dollar companies putting their stamp of approval. Finally, the stock upside is tremendous. For those with a truly strong stomach for risk, analysts are projecting a 12-month price target of $5.75, which is a staggering 260% increase from the current $1.60 price, driven almost entirely by anticipation of permit progress. You see bullish posts online, some calling TMC the Tesla of mining, risky but revolutionary. Permits and the Korea Zinc deal could send this to $10. This captures the excitement and the moonshot potential that few other companies offer.
So we've got these two intensely compelling yet conflicting narratives. Given all this, what's the most likely outcome in the short versus the long term for TMC?
In the near term, meaning the next 1 to 2 years, the bear thesis is unfortunately more probable, I have to say. This is primarily due to TMC's very real and immediate financial constraints and those immense regulatory hurdles. Their critically low cash reserves and rising liabilities pose an existential threat. They are a company desperately in need of capital now. And environmental opposition could absolutely delay or outright block those critical permits. It's a race against the clock for liquidity, and the clock is ticking loudly.
So near term, rough waters. Very rough. But what about the longer horizon? Does the picture shift?
Absolutely. The bull thesis gains significant traction over a longer horizon, say 3 to 5 years. If TMC successfully secures permits and manages to scale production, that's the pivot point. In that scenario, they can truly leverage their vast resource and strategic partnerships, fundamentally transforming their financial position and market standing. The U.S. executive order and the Korea Zinc investment do tilt the odds slightly toward success by providing strategic and financial boosts. But the significant risks, especially regulatory and environmental, absolutely remain. It's a game of chicken with Mother Nature and global bureaucracy.
Okay. As of June 20, 2025, TMC stock trades at $1.60. Given the near-term dominance of the bear thesis, the stock appears fairly valued or perhaps even slightly overvalued relative to its inherent risks. The current price likely reflects investor optimism, a profound act of faith about those upcoming permits, rather than a strong foundation of current fundamentals. It's a bet on tomorrow's promise, not today's balance sheet. So, what recent news and upcoming events should you be watching closely that could impact TMC's trajectory, for better or worse? The real-time indicators for you.
Okay, key things to watch. Just recently, April 29, 2025, TMC USA LLC formally applied for a commercial recovery permit and 2 exploration licenses. This was directly spurred by that critical U.S. executive order seeking to bolster domestic critical mineral supply. You should absolutely be watching for NOAA's decision on this. Expected within the next 12 to 18 months. It's the immediate linchpin for the U.S. operations. Also in April 2025, the $85.2 million investment from Korea Zinc was a huge boost, not just financially, but as validation from a major industry player. Coming up very soon, June 27, 2025, TMC's subsidiary NRRI plans to submit its International Seabed Authority application. This is a crucial step for their international operations and global legitimacy. Sets the stage for wider deep-sea mining.
And the environmental debate continues.
Oh yeah. In March 2025, TMC published data claiming minimal ecological impact from their trials. However, critics like Mining Watch quickly dismissed it as biased. Ensuring this ongoing heated debate about environmental impact remains front and center. Also keep a very close eye on the ISA's July 2025 meeting. Discussions there on the mining code could significantly impact TMC's timeline and the entire industry. And of course, any potential funding announcements to shore up their desperate cash shortages are vital. They are burning cash at an alarming rate. These are the flashpoints. What are individual investors like you saying about TMC online right now? What's the general sentiment swirling around this company? Often a battleground of opinion.
It's definitely a battleground. Analysis of social media posts reveals sharply mixed sentiment. About 40% are positive, viewing TMC as a high-risk, high-reward play. citing the Korea zinc deal and permit progress as strong bullish signals, a chance to get in on the ground floor. Then there's a strong negative contingent, about 50%, highlighting the undeniable environmental risks and financial weakness, warning of massive dilution or outright failure, often drawing parallels to Nautilus Minerals as a cautionary tale. Around 10% are neutral, waiting patiently for concrete permit outcomes before committing capital. Sitting on the sidelines, the dominant narrative is highly polarized. TMC is either a visionary disruptor on the cusp of revolutionizing mining, or a speculative bubble waiting to pop, taking naive investors down with it. Investors are overwhelmingly prioritizing permit approvals, the credibility of their environmental data, and securing more funding. These are the immediate, tangible factors.
So after all of this, what's the bottom line? How likely is TMC to secure those pivotal U.S. mining permits, the ones that could unlock their future and legitimize this whole deep-sea enterprise? It's moderately high. We'd say around 60% to 70%. This probability is largely driven by that U.S. executive order from April 24, 2025, which explicitly directed NOAA to expedite approvals. This reflects America's clear strategic interest in securing critical minerals, particularly given geopolitical tensions and supply chain vulnerabilities with traditional sources.
But it's not a sure thing.
Not at all. Don't underestimate the environmental impact assessments and the very real potential for legal challenges from powerful NGOs or even other ISA member states who fundamentally oppose deep-sea mining. NOAA's review, expected to take 12 to 18 months, will scrutinize TMC's environmental claims intensely, especially given the skepticism from over 800 scientists. The Korea zinc investment certainly bolsters TMC's credibility and financial standing, but opposition from nations like China, which has its own deep-sea ambitions, adds another layer of geopolitical risk to the entire undertaking, complicates the international landscape.
What happens to TMC's performance if they do or don't get these permits? The immediate consequences for their business and their stock, it feels like an all-or-nothing moment.
Securing these permits would be absolutely transformative.
Oh.
The green light they've been waiting for. It would allow TMC to commence commercial mining by Q1 2026, potentially generating a staggering $500 million to $1 billion in annual revenue by 2028, based on projections. This would undoubtedly send TMC's stock price surging, just as we've seen with recent positive news sending ripples of optimism. The sky, or rather the ocean floor, would be the limit.
And if they fail?
Conversely, failure to secure permits would dramatically exacerbate their already precarious financial strain. With cash reserves of only $2.35 million, they simply cannot sustain operations beyond maybe late 2025 without immediate and substantial further funding. This would likely mean heavy shareholder dilution from emergency capital raises or, in the worst case, a serious risk of bankruptcy. International backlash or ISA delays could also severely limit TMC's operational scope, capping any potential upside and forcing them to scale back their grand ambitions. It truly is a binary outcome for the short to medium term, very high stakes.
So what's the insider knowledge you need to navigate this wild ride? To truly have an edge as an individual investor in this deeply speculative venture, what are the hidden truths and the known unknowns you should be focused on?
Okay, key things. The sheer scale of TMC's Clarion-Clipperton Zone resource is uniquely vast, offering a potential generational supply of critical metals, enough to power millions of EVs for decades. That's real. Furthermore, their sustainability narrative aligns powerfully with surging ESG trends, giving them a potential edge in securing crucial contracts with environmentally conscious manufacturers. And the U.S. government's push for domestic mineral supply chains is a significant tailwind, lending powerful strategic support, making them a national priority. Those are the positives.
And the known unknowns, the risks you can see but can't quantify.
Right. The precise regulatory timelines are still murky. The possibility and outcome of environmental litigation from powerful opposition groups are major wildcards. And the technical scalability of their operations from trials to commercial production remains unproven at scale. These are critical uncertainties that could swing the pendulum wildly. Furthermore, TMC's significant cash burn means imminent funding is required, which will likely involve more shareholder dilution or increased debt impacting your ownership stake. Be aware of that. And the things we don't even know, we don't know. The unknown unknowns. Those are the scary ones. Unforeseen geopolitical shifts, like sudden ISA rule changes, altering the whole framework for deep-sea mining. Or the emergence of radically new deep-sea mining technologies from a competitor could completely alter TMC's competitive landscape. And terrifyingly, unforeseen ecological impacts during commercial operations could trigger global moratoriums that would end everything overnight. Your edge as an investor comes from being incredibly vigilant and critical.
You must closely monitor NOAA's permitting progress and pay keen attention to the ISA's July 2025 meeting. Both are pivotal. Engage critically with TMC's environmental data releases. Assess their credibility against scientific critiques, don't just take them at face value. While the Korea Zinc deal does suggest significant insider confidence and provides a crucial lifeline, be warned. The risks of further dilution remain high. This investment is fundamentally a bet on a very uncertain future, where innovation battles immense regulatory and environmental headwinds.
The metals company stands at a monumental crossroads, caught between audacious ambition and formidable opposition. They have the potential to redefine how we source the very building blocks of our clean energy future. Or, conversely, falter under the immense regulatory and financial pressures of pioneering an entirely new frontier. Their leadership, spearheaded by the tenacious Gerard Barron, is making an audacious bet on a future where the ocean's depths power our energy transition.
Yet, as we've seen, the path ahead is treacherous. Environmentalists, global regulators, and fundamental cash flow challenges pose formidable, potentially insurmountable hurdles. This is absolutely not for the faint of heart, but for those with vision and immense patience, it holds a tantalizing, perhaps even revolutionary promise.
For you, the individual investor, TMC represents a truly high-stakes wager, a chance to back a visionary pioneer at the forefront of a new industry, or face the possibility of your investment sinking into the abyss. It's a gamble that encapsulates the very essence of innovation and risk.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.